GM. GM. So I was actually trying to think of what should I do today for a daily lesson. But then I just closed a few trades. Right, you might have seen. I've taken profit on a fetch trade. I've closed one at break even. I've taken a loss on another. And it gave me a good reminder, actually, about never marrying a bias. I've talked about this many times, on and off, but it always bears repeating. If you have trades that are not going as expected per your plan, close them. Win or lose. So the example, I have a fetch trade that's winning and going up. But when we had the sell off the other day, I said to myself, I'm not going to panic and sell on the dip, of course. I'm going to wait for the bounce and see how the bounce goes. So waited for the bounce. I would have expected it to make a new high if it was really bullish and continuing my trend. It didn't, so I thought, I'll sell. You can take profit when you spot, not necessarily weakness, right? But you can take profit whenever you spot that your original thesis is either invalid or losing momentum. You don't have to wait for price to come back to your stop loss. That's silly. Now, if it's a system-defined trade, then yes. But if it's a thesis-driven trade where you use technical analysis to get in, then it's different. Meaning, I had a thesis-driven trade about Fetch, which was AI was bullish as a sector. Fetch was setting up technically for a blow-off top. It did break out from it, but then the market was telling me otherwise, and so I decided to exit early. With cutting a trade at break even, right, I cut a layer AI, LAI. I cut that trade at break even, maybe a slight profit, mostly because I bought and it went up almost straight away several days ago. But then it kept chopping up and down, up and down, up and down between 17 and 20 cents. And now, I don't know what it is, 4 or 5 days later, I'm sitting here and it's back at my entry again. So, to me, from my experience and from my data as well, my data proves this, that if I'm entering a coin with an expectation of holding it for a few weeks, I was maybe 2 weeks, 3 weeks hold for that coin, nothing, maybe not even, maybe 2 weeks. There's an event coming up on the 24th of December, a product release, kind of expecting it to move around then. But if I'm holding a trade with an expectation of a few weeks, or less than 2 weeks, let's call it, and it's not moving after 4 or 5 days, is that back at my entry price? It just tells me that my entry price is not optimal. I might get back into that trade tomorrow, and this is the key point about never marrying a bias. The instant you sell it, right? And I just did this tonight with Fetch, with LAI, and with any other coins that I'm trading. The second I sold it, right? The second I sold it, and Pepe, I sold half of my Pepe. Not the Pepe coins, just the original Pepe. The one that's on Binance and everything. I sold half of that because I bought Pepe at 14, and now it's at 12.8 or something. I'm well, I bought it a few days ago and it's just gone down. It's not nuking, but it's just bleeding. And so, as soon as you sell, you get a much clearer mind. So, the first thing you should ask yourself once you sell is, do I want to buy this back? And if the answer is no, then you made the right decision. So, do I want to buy Layer AI back? No. Do I want to buy Fetch back? No. I think Fetch still looks bullish, but the particular pattern I'm seeing would tell me that it could actually sell off even further. I might get a better re-entry point if I want to get back in. Or maybe I'll rotate to another coin, or maybe I'll do nothing. So, and then with Pepe, do I want to re-enter that half I sold? No. And it might sound silly. You might say, well, of course, you've just sold them. Why would you ever want to get back in if you just sold it? But there's a big difference when you're in a trade and when you're officially out of the trade. You should try this sometime, because I'm sure you know this, but people kind of forget. If you're in a position right now, whether it's in profit, at a loss, at break even, you can exit the full position instantly and then re-enter 30 seconds later, the full position, and be no worse off, save for a few fees. And it's worth trying it sometime on a regular position, just to see how your mindset shifts when you're not in the position. You can get back in. Practice it. Try it. Again, it might sound very simple, but it really, really makes a difference. I look at all three of those differently now. I still hold Pepe, so it's little bit different. I'm still a bit biased. I still obviously want Pepe to go up. Who doesn't want their bags to go up? But I can get back in if I want. I can get back in if the time is right. But now I have capital, extra capital, that I might find a better opportunity for. Right? So never marry a bias. You don't want to get your position and then start trying to prove it. As soon as I get my position, I want to disprove it. I usually disprove it through time. Pepe just was bleeding for a few days. Don't like that. That's time. Layer AI chopped up and down but kept coming back towards entry price for a few days. Didn't like that. And Fetch in profits and has been in profits for a couple of weeks, but is moving a bit too slowly now and giving me more signs that it might go down than up. So it's time really for all of them. And the most important thing is that you don't do this with your winners, right? So I've got multi-bridge, or multi-bit, I think it's actually called. I think I'm calling it multi-bridge, completely wrong, which is up 4 or 5x. Pepe Coins is up 4x. Akash is up 5x from the start of the year, 4x whenever I get in, 4x. Everything's up 4x for some reason. BSSB up 4x as well. And so when I look at those, obviously WIF is up 2x, WorldCoin's going well. I have a bunch of trades going really well. I do not want to touch those until there's some really clear sign from the market that I should. Because your winners are more likely to keep winning. Your losers are more likely to keep losing. That's what the market's telling you. So make sure you always listen to the market. And it never ever hurts to go cash. I don't mean full cash. I've only taken profit or sold small parts of my portfolio, right? I'm still very much long. I'm still, long with the vast majority of my portfolio. But taking some off the table or just flipping into cash briefly just to clear your mind is very, very, very good. Even if it's just to remind you, that key tip that people often forget quite easily, you can always get back in. It takes you 1 second. So consider it whenever you're assessing trades. If you feel like you might have a little bit of bias, if you find yourself hoping more, right, hoping that it's going to go back up rather than actually having any basis for it, get out. Spend a couple of minutes in no position, looking at it and saying, would I actually get long here? If the answer is no, you made the right choice to get out.